What is up, EA Nation? Awesome and Adam here. And we're in a little bit of a different scene than you're used to. It's because we live right next to an herbal healer who has her ocean sound machine on right behind us. And so it was actually picking up the ocean, and we had to go out here into our lobby. But wanted to introduce you guys to Adam. Adam is known as the CFO coach in the world. He's been helping CFOs and really understand their numbers. On top of that, he also owns ABR Consulting, right?
Correct, yeah.
ABR Consulting. And he's also a good friend of us here in EA and has helped us with our numbers and getting proof in EA and everything financially aligned. So today you're going to learn not only how to make revenue, but more importantly, how to make profit. And so I'm really excited to have you here, Adam.
Good to be here. Thanks, Austin.
Yeah. So I want to encourage everybody here that you can at any time ask questions. We're going to be talking about a lot of interesting kind of nitty gritty stuff too, of course, talking about numbers here. We may do a screen share here and there, but mostly it's just going to be us talking, hanging out, talking about how to build a profitable business, which brings me kind of, I guess, to our first story, because you know, there was a few months ago when EA made $67,000 in, or not EA, but the EA team made $67,000 in 1 month and had a $60,000 bill to Facebook, only $7,000 profit. So it might have looked like we had a really cool, thriving business with $67,000 in revenue, but it's not about what you make, but what you keep. And so that's what we're going to be talking about today as an example. And really growing from there. What are you excited about sharing?
Yeah, I think that story is one that's probably shared by most entrepreneurs, especially in the space of digital marketing, where you work hard hours and put in all the time, and you get excited about your revenues, and the end of the month comes and you have no money, and where did it all go? So it's a good story, and there's definitely ways to solve it. So I'm excited to share some of the thoughts I have and some of the thoughts that I know some really influential people have in the industry around how to build your profits, and more importantly, keep your profits. Let them turn into cash that you can spend. You're an entrepreneur. You've earned your money. Hopefully you can use it. Yeah,
I love it. So what are maybe some of the high-level tactic or high-level strategies that we'll be talking about? Maybe taxation, tools, things like that?
Yeah, I think the major one is probably a mindset change initially around, you know, trying to get your mind around, hey, I'm not trying to earn a salary anymore. I'm no longer a salary person. I'm an entrepreneur. So my business isn't my salary. My business is my business. I'm trying to make money so that I can have distributions at the end of the year and go on those holidays I want to go on and vacations. And really tracking cash flow from a point of view that you can make sure that any profits you realize are realized in cash. Tax will come into a big play there. I don't think tax is a major issue for a lot of people, because tax is a result of profits. So let's focus on driving the profits, and tax we can deal with once we've got the profits. So really around mindset change and making sure you have clear and concise goals in your business on how to turn all your hard work into actual cash in your bank at the end of the year.
I love that. Awesome, man. And I guess before we get started, I want to kind of interact with some of you all. Shoot us a comment here in Demio and tell us where you're watching this from. I see Dean is on here. Victor's on here. Victor, you're out in Brazil. Am I right? Good to see a lot of you guys here. Yeah. How do you say that? Fortaleza.
Brazil.
Yeah, Brazil.
That's what I get from that one. Eh?
And can you guys guess where Adam's from his accent? Go ahead and comment. I'll give you guys 1 minute to guess. We got Minneapolis here with Stefan. AAU. One says South Africa. We got Australia, Portland, Maine, UK, Australia, New Zealand. So
the prisoner colony, Australia. Yeah, I'm not from Australia, so what prisoner colony? Yes, victories.
We're getting close. There's a lot of people here that have a little bit of a keen sense to it. Have we given it away yet?
It's South Africa. It is, eh?
South Africa.
Cape Town,
is
South Africa.
Cape Town. Awesome. Zimbabwe.
Close enough, man. I'll take Zimbabwe over Australia, so I'll take that. It's close to home.
Awesome. Hey, well, really good to see a lot of you guys from the group here in the chat. So anytime, you're always welcome to ask questions. We'll stop probably every 15 minutes or so and make sure we jump here into the comments. But kind of start off this masterclass. Adam, what's your story?
Yeah, so, I originally from Cape Town, South Africa. Went to the University of Cape Town, studied accounting, got an accounting degree, then went through my master's in tax. For my sins, I guess it's not the most exciting topic in the world. But yeah, I just always had a keen knack for numbers and really enjoyed that kind of space. I then joined a law firm and was their financial manager for a good 4 years. And I think that's in that space working we had about 100 employees in this law firm. And I really found my passion for management accounting, just like internal focus on a business and, how to kind of drown out all this financial accounting stuff of profit and loss statement, like balance sheets, profit and loss statement and all that kind of stuff and say, hey, what is the meat, how we driving revenues and how we controlling expenses. So that's my passion really, is the management side of things, the internal focus on a business. And then after that, I started a business in Cape Town doing pretty much what I do now is just management consulting for businesses and helping them get their finances in order and helping them be able to, scale and grow and hopefully keep more of their profits. And then my wife and I decided to move to Annapolis, Maryland, which is why
what was the fun of that?
It's a good story. I mean, my wife lived here for about 8 to 9 months a couple of years ago, and she just loved it. She loved America, and she made some really good friends here. So we got married and decided, could be a good experience. So we made the move, which was great. Then did the same thing, started pretty much the same kind of company here in America. I've got 2 great partners with me. Krista Stair, who lives in Annapolis with me. She's a financial consultant, really focusing on bookkeeping and financial reporting, a great asset to our team. And AZ Moya, who's out in Austin, Texas, Dallas, Texas. And he's a CPA as well. And so he's more the financial guy. He's the tax guy. So I may have some education in tax, but he's our tax guy.
Awesome.
So I'm the management consulting guy.
Now, outside of consulting, you also are pretty involved in rugby, right?
That's correct. I do. You
got any rugby guys in here?
I don't know. I wonder if they are. I've coached rugby for a long time and back in South Africa as well. And at the U.S. Naval Academy here in Annapolis, I'm coaching here. So that's been a lot of fun.
Dude, I got to come to a game sometime.
I think you do. It's 2 weeks time, Air Force at home. It's going to be fun.
That's going to be a hell of a game.
I think you should come.
Air Force versus Navy.
It's always good. It's always good.
Sweet, guys. Okay, well, let's go ahead and jump into the meat and beans here. What do you want to kind of start off with here today to start off this masterclass?
Yeah, I think to really paint that, I alluded to earlier, but really to paint a bit of a picture to those of you that are listening and to anyone else that's kind of in the process of starting a business or have started a business and you kind of going along the path of trying to build a business, is to really try and change your mindset around, your business is not your paycheck. Mm-hmm. Your business is something that you're going to work on. So I've got this book here, actually, this E-Myth.
That's a good book.
E-Myth, the E-Myth book is really good. And Michael Gerber talks a lot about working on your business, not in your business. If you work in your business, then you're just going to expect to get a paycheck and leave. So when you're working on your business, your mind's got to be pretty different around that. You're trying to build something for long-term success. So, the real thing is the mindset change of, okay, I left my 9 to 5 and I was earning, say, $50,000, $60,000 a year, and I started my own business. Mm-hmm. I want to earn more than that. Great. That's great. Of course, you want to earn more than that. If you're going to earn 30 a year, then maybe you shouldn't have left your 9 to 5. It would have been a lot easier to stay in it. So, yes, okay, so you want to earn more than what you were earning in your 9 to 5. But at the same time, you don't want to look at your business like, hey, if I can earn $80,000 in my business, I'm just going to earn $80,000. Mm-hmm. That's not a really clever business decision if you're trying to build a business. You've got to look at what is good for your business first. How do you keep the profits in your business that it can grow and expand so that you can earn the salary you want to earn, but forever or for as long as that business is around? And another little story is, for those of you that have read Simple Numbers, Big Profits, Greg Crabtree is the author of that great book. I recommend to any of you to read, and I'll talk a little bit about it later as well. And he talks about a cow, and if your business is a cow, he says you've got kind of 2 options with it. You can feed the cow and you can milk it every day, and you can get milk for a long period of time, or you can say, oh, I'm tired of feeding it. I'm just going to kill the cow and have some steak tonight. Mm. And a cow can give you a lot of steak, which is great, so you can eat for a while, but then it's gone. Mm-hmm. And it's that mindset of if you're not feeding the cow properly, you're not going to be able to milk it properly. And that mindset of, okay, so now start forgetting about your business as your paycheck, and start thinking about it as, okay, I need to scale. I need to build a model in my business that has revenue, that has expenses, ultimately has profits, the right level of profits. Am I controlling my cash flow, that I'm never in trouble? Am I building cash reserves so that I can grow and expand and ultimately pay myself a salary that's reasonable for a long period of time? And it may not happen immediately. It may not happen in a year's time or 2 years' time, but eventually it's going to happen where you're going to get some really cool distributions from that business, because it's going to have equity in it. It's going to be profitable. And that's what makes good business owners successful, is they build a long-term business that one day, they can sell and get a really good return, or they just earn great profits for years and years to come. They're not just killing their business before it even starts with trying to take all their money out of it.
Dude, that's genius. And I think there's also kind of two hopeful exits of a business. You just like let it cash flow and continue there, or you end up selling it for a huge number.
Which is, and that is, and these are not mutually exclusive. So you want to build a business that does both for you, that will always give you that cash return over the long period of time. But at any point in time, you could sell and get that lump sum. And so you don't need to think about your business differently right now. Your business is the same thing. You're trying to generate as much positive cash profits as you can. And then one day, if you're in a position to sell, great. If not, you're earning a good income. So you don't have to think of them differently. You don't have to think, oh, I'm just building this business to sell it one day, or I want to build this business to have it forever. They're the same process, and you've got to have the same mindset right the way through.
I want to expand on this, especially for some of you guys that own an online business, more specifically, some of you guys that own agencies, since I know a lot of you all do own a marketing agency, and you're thinking a lot about like, oh, I only need 5 clients, 10 clients to be pretty much set up. But I don't want you to think about how would it be just for you to get that income. What would it cost in expenses to hire somebody to do what you do every day? How do you create it not to be a job, but to become pretty much a self-living organism that is self-sufficient? It has its own pieces of salary that all come to help make the function of the entire wheel work efficiently without you in it. And so I look back on my business, and if I outsourced literally everything that I did with my certain price structure I had back in my business, when I think it was like $2,500 per month for Facebook advertising services, I would have my contractor do 50%. So I would pay him, $1,250 a month. And then the rest was income for me. But that's not scalable, because I'm now thinking of all of the rest as just like expenses per customer. I'm not even looking at overhead. I'm also not looking at taxes on top of that. So it's like always dwindling down a lot more. And then I'm not even thinking about how do I grow my agency through paid media or other marketing expenses. And so at the end of the day, my certain structure, the way I had it in the beginning, was not the most efficient. And that's why you'll see big agencies have to charge their clients a lot more, because they have a lot more overhead. They have a lot more talent, which talent is expensive. And they also need to make sure that all of the positions are self-run. So pay yourself according to the position that you could pay somebody else for. Here in our company, since I'm the CMO, I get paid what a CMO would get paid on the market. I don't get paid what an owner would. Dave doesn't get paid, because he's, an owner. He gets paid salary based on his role in the company, which is CEO. And so everybody gets paid based on their role of what they do actively in their business every day. And so really separating your salary versus your, what'd you call it, dividends or ownership income?
Ownership draw or distributions, dividends, they will mean the same thing.
Yeah. So even for your agency right now, pay yourself a salary. Correct me if I'm wrong.
Yes, definitely.
And then if there's excess revenue that you've already, put into your expenses in marketing and to grow your business, that would be your distributions for your agency, right?
So there's a model. We'll get into a little bit more detail later around. But you've hit the nail on the head. That's perfect. You've got to find a salary base that is reasonable for you doing the job you're doing in your business, and then look at anything that you can achieve out of your business over and above that, like distributions or profit share, as as a real after effect of some really good work done, because there's other little factors you got to factor in there. You got to factor in taxes. You got to factor in any debt that you may have incurred to get your business to where it's going. It's very hard to start a business these days without any debt. Mm-hmm. Okay, so you're gonna have something along the line somewhere that you're gonna need to factor in. And there's a concept called building core capital, which Greg Crabtree talks about again in that book. Which is, again, you've got to read that book. But building core capital in your business for long-term success, and then you're going to start looking at distributions. But it does really start with a salary base that is for you, that is reasonable for your position in the business.
Awesome. I love that. So, a few people are saying that their connection is kind of bad. I want you guys to give us a giant 1 if you see us and hear us. Give us maybe a 2 if you can only do one or the other. Okay, I'm getting a ton of 1s here. So for you all that unfortunately maybe have bad connection here, figure out your Wi-Fi or other scenarios. But we're going to continue on here.
Awesome.
So you have a lot of credentials. You moved out here. What is the next step for ABR Consulting, and where do you want to grow that company?
Yeah, so for us personally, I mean, it's funny, I'm sitting here trying to give you some advice around your business, which is some humble pie that we've got to eat in our business, because we're also trying to grow a business. So really just trying to scale our revenue, so grow our revenues and reaching more people, pretty much so like a lot of people in EA. A lot of our clients are currently EA members, and digital marketers, guys out there that are looking, who have kind of got a base point in their business where they're generating some good income, but now they need to build a proper structure financially to understand what that means and drive everything I've just spoken about. And that's what we do. That's we're an accounting firm. So we do from bookkeeping right the way through to taxes. We do the entire show. So for us, it's about just connecting with more and more digital marketers who are really excited about growing their business and seeing if we can help them and hopefully help them keep more of their profits.
Love that. Cool, guys. Yeah, I mean, we totally recommend him because he helped us a ton getting everything situated and pretty much all systemized as well, where everything flows from one account to the other. But let's go ahead and move here into the meat of the training. Let's talk about basic accounting strategy and looking at balance sheets and expense reports. And, where do you want to start here?
Yeah, I mean, if you're starting out your business, I wouldn't go get overly concerned about balance sheets and stuff like that. You really just got to focus on getting a profit and loss statement that makes sense in your business, that you're tracking as often as you can. I'll talk a little bit more detail around that later. If your business has been running for a period of time, you will hopefully have a whole lot of profit and loss statements. You'll hopefully have a detailed budget and forecasting report. And then you can start drilling down, as the accounting kind of terminology is, drill down into those and really get some meat from your income and your expense. In terms of your business right now, you've got to focus on creating a plan that is structured around a profit and loss model that gives you profits. Not a profit and loss model that's showing losses, one that is showing profits. You've got to then start sticking to that, and then you've got to start realizing that month after month after month in order to grow your business.
Cool. Awesome. And I guess when we think about profit and loss statements here in the beginning, how would be the best way if I'm like going into this for the first time, never really doing it, maybe as a lot of entrepreneurs are, didn't go to college. And so how would I even start off structuring that?
So there's a couple of options. I mean, my advice to everyone is get like a QuickBooks account.
QuickBooks?
Or Xero. They're all pretty good. I mean, our firm is we're a QuickBooks firm. We're QuickBooks accountants. So I would promote QuickBooks simply because I work with QuickBooks. They're all pretty good. And you can just do a little bit of research and you'll find one that fits for you. And they've all got self-explanatory trainings in them of how to use them. That is probably the biggest thing I would do. If you can't do that, there's a number of tools out there. If you're reading any of these books that I'm going to tell you, especially Simple Number of Profits First, there's a whole bunch of tools there that you can use. You can go to cfocoach.com. We've got a bunch of tools there like profit and loss, cash flow, tracking sales, tax analysis, like tax planning. So you can go onto that. They're free. You can download them. And they give you a good template to start using, a couple of videos to show you how to use them. That's That's step one. Is definitely.
And by the way, guys, we're going to be, I'll put the links to those tools in the members portal right below this video. So if you're watching the recording of this, go ahead and click on that, put it in a tab for later. But yeah, I think these are going to be really great tools here. And you would say that that's like a framework, like almost the framework for how to do what? Is it accounting, taxes?
So we call it building a reporting framework. So,
okay.
If you want to measure anything in the world, doesn't matter what it is, you're going to have raw data put into a way that you can read it, understand it, so you can start measuring it and comparing it and analyzing it. And so our base point is you've got to create that framework before you start to you may want to get, hey, I want to get 15% taxable, like I want to earn 15% taxable 15% profit in my business. Okay. I want to save money on my taxes, or I want to increase my distributions. You can have all these concepts, but unless you have a framework that shows you how your business is doing at every step of the way, you can't make those decisions. So, what we call building a financial framework is implementing a system into, and that's again, he's all about system in this book. And yes, I think this book's a lot about operating systems, which is hugely valuable in your business. But likewise, financially, you can't wait 8, 9, 10 months to say, oh, I don't even know if I'm making money. I don't even know what my profits are. I don't even know if my profit and loss statement is even looking healthy or not. Yeah. So you got to do that from the beginning. Implement a framework that you can start seeing how your business is doing. Then you can start making these decisions. Then you can, when it comes to taxes, and I'm glad you put out this point of taxes, is people get so worried about taxes. You get taxed when you're making money. Okay, so if you're making money, you can pay a CPA to help you with your taxes. It's not an expensive thing. I would recommend it because he's going to save you money in the long run, and it's a complicated process. But even if you go to a CPA and say, "Hey, man, I want to try and be more efficient with my taxes," he's going to ask you, "Okay, so what's your profit and loss?" Well, he's going to ask you all the questions about your business, and if you can't answer them, well, then there's no point you trying to save your money in your taxes if you can't answer how your business is doing. So framework, just
what's like a nightmare client to have to come to you before, like what would, I guess on the other side, what would be like an ideal situation for a client to have before even talking with a CPA?
So I'll go to the first one. So the worst is probably someone who goes like, "Hey, I haven't filed my taxes for the last 2 years and I have no idea how much money I'm making." And then you go, "Okay, well, I want to help you, but it's hard to help you, and it's a really long process to help you." And when I say worse, it's just I kind of feel sorry for the business owner because they've just been in the dark in their business for too long. It's not fair on them. On the contrary, I think the best person is someone who understands the fact that you do need these systems and have taken steps to implement them. Now, how well you do that, that depends. Okay. If you've got a QuickBooks account and you're trying the process and you may be using some of these tools, you're 50, 60, 70, 80% ahead of anyone else, which is lovely to work with. Yes, there may be some refining, there may be some changes, but you've at least got something to work with. And I mean, that's a dream client for us, as someone who's got a base point that we can just grow.
Cool. I think having just the consciousness of what your finances are always on your mind is so important. It's like, how often do you weigh the baby? As often as you can. Yeah. Make sure that's healthy and make sure like you don't need to go to the hospital right away. You got to always know what's happening in your business. Do you recommend daily, weekly, monthly?
We definitely recommend weekly. And each week doesn't have to be the same. At the end of every month, you're going to have a pretty big review of the past month, which is quite a lengthy process. We would say in the middle of the month, you would have about one that is 60, 70% of that time, just making sure you're on track for that month. And then the other 2 in that month, I would say, are maybe 10, 15-minute little, just look into your books, just have a look at what your profit and loss statement, have a look at your customer reports that you have, and just make sure you're happy with what you see. If anything hits you in the face and all of a sudden the baby's not picking up weight like you think it should be, then you're going to have to spend some time digging into that, which is perfectly normal. But once a week at least, you've got to just see a picture of your business financially, at the least.
I was watching the Warren Buffett documentary yesterday, and he said something that really kind of stuck with me here. He said the chains of habit are too light to be felt until they're too heavy to be weighed and to be burdened. And I find that really true. Is like maybe, you don't know what you don't know yet until you've dove into your books. And if you make a habit of it, then that'll be great. But the chains are maybe going to be too heavy at that point. You need to do it now and create these habits so they compound. Eventually, it might get to be that those chains become too heavy to weigh on you, and even going to a CPA might not help your really awful situation. So figure out, what's happening in your business right now. And I guess the best way to do that is create a QuickBooks account and start getting work.
I would say, and if you're not comfortable with that, use some of the reporting tools that are available that I've mentioned. They're really self-explanatory. They kind of help you out there. I wouldn't recommend them as a solution. QuickBooks, Xero, those things are a solution. They're, double entry systems, all those accounting principles that I don't want to talk about here because they go over a lot of people's heads. But they're built on accounting principles, so they're really important. So get that up and running, get your bank account set up in there and start the process. Set up a chart of accounts, watch the videos, see what it is, and then ask questions. There's, EA is a great platform. Ask the question, ask, hey, I don't understand this. I don't understand this. We're fortunate enough, our firm's on a member of EA, and we'll reach out to anyone and help with and answer any types of questions we can. So, don't be afraid to ask. Don't be afraid to pick up books like I've mentioned, and really just it's your business, man. You want to milk it for years, then you got to invest the time. Man.
I love that. Cool. Well, let's kind of move here into pretty much the strategies that we're going to be talking about. In the meantime, unfortunately, Tesla. I have them coming here to help me out with my car, and so they just gave me a call that they're here.
Okay.
So I'm gonna let you dive into the training for just a second while I go talk with my Tesla guy. I'll be back in 2 minutes.
It's a good car. So yeah, so for this part, I really just want to kind of focus on some more high level kind of theory around the accounting process and understanding what profits are. So from an accounting process, you know that profits are income less expenses equals your profits. Okay, so income, which is the same as revenue, is your flow of money coming into your business. Expenses, or everything that you're spending to make that business run, things like rent or marketing or salaries you may have, and the net figure of that is profits. Now, there's another book, Profit First. For those of you that have read it, I do recommend it. Maybe not in its entirety, but I do recommend it. Michaelowitz, I think is his surname, last name. He talks about profits first. So his model is saying, no. You got to take income, so revenue, then take out profits, and that equals expenses. So it's literally just moving that formula around a little bit, and it's more about mindset. So his mindset is, you've got to stop thinking about profits as the byproduct of your business. You've got to start thinking about profits as the product of your business. You are trying to generate profits. So put it in the forefront of your mind, put it right in there so that it's one of the first things you're thinking about. He's got a couple of little ideas around creating different bank accounts where, for those of you that know Profit First, have separate bank accounts for different elements of your business. Now, I'm not saying you shouldn't do that. I love the book. I love the psychology of the book, and I think it's awesome. I think if you're implementing the correct system in your business from the get-go, I don't think you need to do that. I think it actually creates more work in the long run. But definitely, read the book and take what his mindset around a business away from that, because a lot of it is really around mindset. So when we're talking profits, we're talking about the money you generate at the end of the process of bringing in everything that you can bring in and spending everything to generate that income. And just on profits, it's really important to think about how much you're taking out in that expense block. And you spoke about it earlier, Austin, and I'm so happy you mentioned it about salaries. So if I'm generating $10,000 a month in my business, and let's say I have average expenses of $4,000, a bit of marketing, some rent expense. I've got, some software, ClickFunnels account and Stripe account, or an X, Y, and Z. And so I've got all that stuff. That's helping me deliver a service to my clients. So I'm making a profit of $6,000. Okay, 10 minus the 4 is a profit of $6,000. Now, I'm not actually making a profit of $6,000 because I haven't paid myself yet.
Right.
So the danger here is saying, oh, my salary is $6,000. And every month my salary changes because maybe next month I sold 11,000 and I still kept the 4,000 expense. So I made 7 this month. And the next month I made 8. And the next month I made 9. And the next month I went back to 7. And if you're paying yourself that, which I don't want to scare you, but a lot of you probably are, you're just transferring anything else you can out of your business, that's a red flag to me. Because technically, when you run a profit and loss statement, you have 0 profit because you made no money, because you paid yourself all the money. So that salary thing is, you've got to say, okay, my salary is 60 grand a year. That's what it is. Okay, my salary is 60 grand. It's $5,000 a month. So in that month where I generated $6,000 of surplus revenue, profits, as we may call it, I'm going to take off my salary of $5,000, and I made it my profit in my business $1,000. That's what it is. And I'm not going to next month go, oh, I'm going to take 6 because I made an extra. No. I take my 5, and I take my 5, and I take my 5, and I take my 5. And what happens to the 1 is it grows, because the 1 drives into your cash flow that allows you to build your business, allows you to scale, allows you to take care of any debt there may be, allows you to start planning for that tax bill you're going to have. You've got a 60,000 income. You're going to, at some point, you're going to pay some taxes. That 1 is starting to be allocated a little bit to taxes. Like I said, building some core capital. I'll get to the concept of core capital now. And at the end of the year, all of a sudden you're reflecting a profit. And if that profit is enough, meaning that profit has taken care, that cash profit now, you've got $1,000 each month. You made cash profit. So you got $12,000. Anything, it's cash sitting there in your bank account. Take care of the taxes. Take care of any loans you may have. Take care of make sure you're building this core capital. I'll get to that again now. And then whatever surplus, that's your profit draw. Not the 5, 6, 7, 8, 9, 10 end of the year. Oh, I haven't even paid my taxes yet. Oh, I bought a new car and I went on vacation. I haven't paid. And people find themselves in this problem all the time. Don't let it happen to yourself. Fixed salary, put that salary into your expense line, and then you'll have a profit figure. So a question people will ask is, what profit figure? Okay. If you read Greg Crabtree, 10% is he calls the new break even. And I think that must be a minimum for you. If I was you, I'd shoot for 15, maybe 20 if you can, especially if you're service based, like a lot of people in EA are, a lot of digital marketers, they're service based. They don't have big, inventory costs and, big things like that. 15, 20% is good. So what does that mean? What is 20%? I don't know. Okay. So 20% of your revenue. So if you're generating $10,000 a month, you want to have a profit line of between $1,500 and $2,000. Okay. That's 15 to 20% of that $10,000 revenue that's bringing in, which leaves the rest. So that, $8,500, $8,000, to run your business. Okay. And that is partly your salary, which is now fixed. And the other part is obviously the operating costs that you have, like rent and everything else we've mentioned. So that's what you got to aim for. So when you start projecting in your business, put that number down and make sure you hit it. You can't have a month where it says, oh, my profit's 0 because this month I want to have an extra massive marketing campaign or whatever it is. And yes, you can do that, but you got to be mindful of what that 0 is going to do long term. Are you going to be generating enough income? Are you going to be generating enough cash flow? You've got to look at it in the framework, not just by itself.
Wow. Guys, type in aha if that was just so mind-boggling. Because for me, that's exactly how I used to build my agency. I got a lot of ahas here. That's how I was too. At the highest point of my agency before I really started getting at EA, I was around $10,000 a month. Out of that, 50% would go to my contractors, and then I would take the rest as salary. I didn't spend any money on ads. It was really, I attained most of my clients through hustling. And so I didn't even think about my gas bills. I didn't like my driving car gas or, business cards or any of that. That just kind of came out of my salary. I didn't ever separate the two. It's almost like my personal expenses were just part of the business. Maybe this is the difference between being a self-employed person and somebody who actually owns a business. So maybe I don't know if this is in your realm because accounting and maybe finance structures are different, but would you recommend an LLC, S Corp?
Yeah, it's a great question. So I alluded this a little bit in the beginning, and I'll kind of hash it out again here. Is if you're making money, okay, and you believe that you're making money in your business, then you need to go and speak to a professional about what is the best LLC, S Corp, what is the best thing for you, and tax planning, because that's LLC and S Corp are really around your tax structure more so than anything else. It's hard for me to give you advice on that if I haven't seen your books and haven't seen what you're doing. But I'll give you a little overview. Is if you're starting out and you're just new to this whole idea, LLC, definitely don't even worry about S Corp. It's just too complicated in the beginning. Just LLC and drive profits. You LLC, get your framework in place, drive profits. When you 5, 6, 7 months into seeing, hey, a great profit line, my bank balance is growing, I'm feeling good, take some of that money, invest it, go see a CPA, say to him, hey, okay, now I'm making money. Now I want to control my tax bill. And he may say to you, hey, it's maybe worthwhile you go to S Corp. The values of an S Corp is you do get, a tax saving on distributions, but you still need to pay yourself a reasonable salary. So there are little nuances there that you need to just understand.
Yeah.
But on the outset, LLC, if you believe you're at a place where you're generating enough income, make the investment, speak to a tax guy, and he'll advise you whether maybe you should change over to an S Corp and then some other tax things you should do. But start with an LLC. It's by far the easiest.
And when we're looking at, the two, right, you have, let's say 2 bank accounts, right? You have your personal salary. This is Austin's bank account. And then I also own an LLC called Bravado Branding, which is my agency name. And so my client checks would go into Bravado, correct?
Yep.
Deposit revenues there. I pay my contractor out of Bravado's LLC. Correct. And then I also pay my salary from my LLC to my personal.
Yeah.
Right. Okay. Now, how would I do that? What is a common way to pay yourself? And because doesn't the business pay some of the taxes and then you pay some of the taxes?
So if you're an LLC, you don't need to worry too much around this flow, because everything that you make, whether it's a salary or it's a profit at the end of the year, is taxed in the same way it's in your personal name. So you're getting taxed as Austin, you're getting taxed in that way. So you want your business to cover the tax bill. That is good practice if you're doing these systems correctly. So you can pay yourself that salary. And then if you want to make, quarterly payments of tax wise, you'll work out. There's a tax tool and CFO Coach if you want to use it, but you go in there and you can say, okay, I'm expected to make X amount. What is my tax rate? So my tax liability is maybe $3,000 for the quarter.
Yeah.
And you would have planned that ahead. So it would have been in your model so that you would have the cash flow in your business to pay that over for you, which is perfectly fine. On that bank thing, from word go, try and get 2 separate bank accounts. One for you personally, that is yours, that you run your life out of, that you take your girlfriend out and your wife out for dinner and all those kinds of things. And one that is your business's. And the only flow of money between the two is your salary check from one to the other. Just on that, a lot of people will say, but okay, I want to set myself a $60,000 salary. I want to do that. Okay. I want to earn myself $5,000 a month. But what happens if I only generate $6,000 of revenue?
Yeah.
And my expenses are $2,000. Now I can't afford to pay that anymore. And this is that element of sweat equity that comes in here, that yes, you can't pay yourself. You don't have the money to pay yourself, so you won't. But you want to make sure that you're still recording your salary at $5,000. And the amount of money that you're not paying yourself, you need to record as sweat equity, because that's effort you put into your business for no return in cash, which means you built that value in the business. So that when it comes to a time when you can afford to pay it, you can pay yourself out that equity. Because that's the value you've derived from your business. That could be quite a long process, but and it's just really important to understand that that's value.
Yeah.
And don't let that go, oh, I'm the business owner. No, it's value. Put it down there. That's sweat equity. I'm owed, 56,
in the same way that, like, if I hired somebody and maybe I wasn't able to pay them out, like, they should get paid later.
Exactly. To them, it's a loan. So them, it's a liability in your books, because they're not an owner. So it's a liability. You owe them the money. In the same way, it's yours. So it's equity. It's value. It's value that is due to you in your business. And yes, hopefully the occasion will never occur that you never realize that value and maybe your business doesn't work, so you never get paid out that value. No one wants that. No one's aiming for that. But once it's there and it's sitting there, you know what it is. Hey man, I've put in $30,000, $40,000 worth of sweat equity in this business, haven't been paid for it yet. So I want to earn enough money over the next period of time that I can start paying myself what I should have been paid.
It's really almost important. Like with a mindset, you need to be switching yourself from the owner of the company to the position that you work in, probably CEO for most of you guys watching. Switch yourself from being the salary taker to the salary giver.
Yeah,
in the
and
same
it's
way.
a balance. I mean, you are both. Okay, so
Yeah.
that's got to understand. You both the owner and you're the CEO, so you kind of wear many hats in your business. But you've got to look at it in a way that, okay, I'm the worker. I want to earn my $5,000 salary.
Mm-hmm.
Okay, no. I'm the business owner. Can I pay the $5,000? Yes or no? What are the good decisions I'm making in my business? And making sure, but I still owe that person who happens to be yourself $5,000.
Yeah.
Am I recording that? Am I putting down? It just goes into equity because you're the owner. But that is important. The salary thing is an amazing concept that people have got to get their heads around. When I say choose, you can do some research on it. You can see what's reasonable in your business. Look at your life. Look at what you think is reasonable. So you don't be silly about it, but really get down a number of a salary that you believe is reasonable for yourself, and try and stick to that for as long as you can until you're realizing those profits. Then you can look to increase your salary.
Cool. Let's talk a little bit about factors of cash flow.
Yeah.
I want to talk about taxing and repaying debt and core capital and distributions. Where do you want to start here?
Okay, so I want to start with that core capital concept. So this core capital concept, again, Greg Crabtree in Simple Numbers, Big Profits talks about this a lot. And core capital is the amount of cash reserves you have in your business at any one time that are there to help fund your business growth. Okay, and that's core capital. So his measure is 2 months operating expenses. Okay, so what that means is, let's get back to our old example, $10,000 a month income, revenue. We've got $4,000 worth of general expenses, taking a $5,000 salary, trying to make a $1,000 profit. That's 10%. We're a little bit low where we want to be, but let's just keep it like that for now. That $4,000 is your operating expense.
Yep.
So you need to build cash reserves that cover your core capital of 2 months of that amount, which is therefore $8,000. Okay, so that's a core capital you want to have in your business. Now that you may be sounding like $8,000, man, like that's like 2 months' salary for me. Like, come on, like that's like a lot of money. You want to keep milking your cow? Okay, you've got to do this. Like otherwise, because what you'll find is, oh, I'm on 6, I'm on 7. Oh, I want to go on that vacation. I want to do this. Oh no, I'm back to 2. You're starting to kill the cow. Okay, that's not going to help your business. Okay, so core capital really is around operating expenses. So there's 4 main factors when it comes to cash flow. So the aim of your profits in your business is you've generated income, you've paid everyone, you've paid all your suppliers, your contractors, your rent, everything. You've paid yourself a salary. You have a profit. That profit, which should be cash. Most of us are dealing in cash. Most of us are in the service industry. Cash is a good thing at the moment. If you're an inventory-based business, it gets a little bit different with credit terms and stuff. But let's just say it's for cash right now. You want to build that is going into your cash reserves, $1,000. The first thing you want to cover, like I said, is taxes. Okay, so you work out, I'm going to earn a $60,000 salary. Let's say my tax rate's 30%, let's say 33%. Okay, so it's going to be $20,000 at the end of the year. Okay, so the first and $20,000 at the end of the year. So that $1,000, the first part of that money is going to cover that tax bill. Okay, so you want to keep building that profit line till a point where you have enough to cover your tax bill. Okay, then you're happy. That's step 1. Then you start saying, okay, I've got a whole lot of debt. Okay, I owe $50,000 in debt. You're going to create a plan where you're going to start repaying debt. So, okay, I'm going to pay $2,000-$3,000 a month, whatever is available to me. I want to start repaying this debt.
Yep.
So once you've built the first one's a tax bracket. So I've got to the tax bracket. Okay. Then the next month, money keeps coming in. Okay. No profit draws yet. We haven't got there yet. Okay. It's now debt. Hey, I want to try and get $2,000 or $3,000 a month that I can start paying to debt. Start paying to debt. Okay. Start paying to debt. So hopefully you settle the majority of the debt. Unless you've got some really good terms that you can keep, that's fine. But that next portion is trying to go to debt. Thereafter that, we're going to start building that core capital in our business. So it's that tax bill, settle any debt we have. That's going to fluctuate because as you settle it, it goes away. Hopefully it's away now. So it's just tax. Then the next little block on top of that is going to be your core capital, the $8,000. Then you can start distributing profits.
Interesting.
Because now you're feeding the cow.
Yeah.
Okay. Because when you take the profits first, when you go here and you go, okay, I've got $10,000 of profit sitting in my bank account. Cool. Let me take some of that for a profit distribution. You're not feeding the business. You're draining the business. You're taking stuff out of the business.
Yeah.
The first thing you got to do is definitely the tax bill. Make sure you covered that. Second thing, core capital, get 2 months surplus sitting in your bank account, ready to go to be used. Then anything above that, start paying yourself a distribution. And if you're doing this whole thing properly, you're still earning a $60,000 salary. Okay, so it's not a bad thing. Okay, that's still great. You can still feed yourself. So keep going, but make sure you're feeding your business. And that is those 4 major factors in cash flow. So the first one is your tax bill. Any debt, you've got to look after debt. You've got to start sorting out your debt. It's going to come back and bite you, those payments. Core capital, and then lastly, you can start looking at tax distributions.
Awesome.
I mean, sorry, not tax profit distributions, taking money out yourself.
Man, that's awesome. So you said first get your tax cushion here.
Yeah.
Now, my original thought would be, I should pay off my debts first, right?
It really depends on the level of your debts and what kind of terms you have on your debts. IRS aren't very lenient on their terms. They're not the best people to loan money from. Okay, so a bank is normally a lot better to loan money from. So taxes are inevitable, and you're going to have them. Okay, so it definitely step one is get your taxes in order, because those terms, those faults in tax are a lot more detrimental to you than your debt. Because debt is structured around debt. The point of it is debt. So you have terms, you have conditions, it's structured in a way that you're actually going to pay it back over time. Taxes are due when they're due. And you don't want to start building up huge tax liabilities with the IRS. That's not going to be healthy for your business.
Now, wouldn't a credit card bill, would that be an expense that would cut away from profit, so that wouldn't even be taxable?
So credit cards are interesting. That's a really good question. Hopefully you're using your credit card as part of that $4,000 expense allocation you already have in your business.
Okay.
So hopefully what you're doing is let's say you're spending $1,000 a month on Facebook, and it's coming off your credit card. Great. Okay. It comes off your credit card. Then at the end of the month, you got to put the $1,000 back into your credit card.
Yeah. To
then spend the next $1,000 the next month. Okay. So the net effect is exactly the same. You still have $1,000 expense for Facebook.
Okay.
Yeah, maybe using it on your credit card, but that's fine. If you're using your credit card to an expense amount over and above that $4,000, you're now starting to build debt. And that's what you got to look at. Okay. So you want to control that spending on your credit card to that forecast that you have. If you started the business and you had a whole big whack of credit card debt, that is debt. Debt. It's all it is. So again, you're going to have to look at that second cushion of how to set your debt. You're going to have to start looking at that in that portion. How do I start setting that credit card to get it back to usual? But really, guys, try not to use your credit card to fund your life or your business. Try and use your revenue to fund your business. That's the whole point. Yes, it may not be that realistic. Sometimes in the beginning, you've got to start somewhere, but then that's a debt portion. And then you've got to start creating a plan and say, okay, I'm going to put $500 every month is going to go towards paying off that debt portion.
Yeah. A good example of using debt is the way that kind of we do here in EA is we have an Amex card. We'll spend money on Facebook. Within 37 days is the number I focus on to spend money on traffic, to get new members. On the 37th day is trials over. Month 1 and month 2 have come in. So if I can acquire a new EA member for less than $60 within 37 days, then I can pay off my Amex bill with no problem. It'll be completely an expense with no debt by the time the credit card bill comes around 45 days later. And so that's one way that we use debt. But if, let's say, maybe the Facebook algorithm goes wrong, or maybe I have an ad that's not converting, and all of a sudden now it's $90 to acquire a new EA member, then that would take 3 months. Or basically, it would be the third month. So it would be 37 days trial. 30 on the 8th day is $30. 37th day is another $30. So that's now 37 days in, and then another 30 days would be the 4th. So 97 days in.
Yeah. Depending on So
that means I would be racking up a lot of debt.
Now you're racking up debt
instead of expense.
Yeah, and so you still have the expense because the cost to acquire that person is still an expense, but you funded the expense by debt.
Yeah.
Okay, so again, you don't want that to happen. No one wants that to happen in their business. You just got to start controlling that. Again, if you don't have a framework and you're not tracking these things, you're not tracking your expenses, you're not tracking your credit card bill, you're not tracking where that money's coming from, there's no even way you can even start to even try to think about these things. So again, I will hop on this whole framework thing, and I will hop on it for the rest of my life probably, but build the framework so you can start tracking it.
Yes.
So you can start controlling that. Say, okay, fine, I built up some debt, but now how do I claw back that debt with the profits that I should be earning in my business? And obviously it's not always going to work. You're going to have funnels that aren't going to work. You're going to have leads that are going to lead to nothing. You're going to pay for things that you get no return. That's business.
Yep.
You just keep working hard to make sure that you get more return than yours.
Exactly. And that's why in our daily huddle, I mean, I've talked about this a few times in other masterclasses, is we answer, everybody on the team has one metric that we focus on. I focus on new trials. Austin Troyer focuses on cost per acquisition. And so every single morning, me and him get together and we look at how many trials do we got and for what cost per trial. If things are getting a little expensive, then we know which ad sets to turn off. Think about that for your business and your clients. Always having that temperature gauge on your ad spend or any other expenses that are maybe recurring pretty often. Of course, we spend a lot of money on Facebook. And so we have to make sure that every single day it's profitable. If not, maybe over a weekend that we're not looking at it, it could get really expensive. So have that framework in place that your reports are coming in so you know exactly where to look and what's really important. Have KPIs that you need to stay within to make sure you're on track by the end of the month.
Definitely.
Yeah.
Loving
cool.
it.
Awesome. So next subject is forecasting and budgeting.
So that's around the system that you're going to create. So we just touch back quickly. You set up your business, you create an LLC, you register it, you open your bank account, you set up a QuickBooks account. Now you've got to create a plan for the year. Okay, so create a plan that makes sense in your business. Create a plan that has revenues that, one, are realistic, that you can meet, expenses that you understand why you're going to have them, and then a profit line that is reflecting that 15 to 20% of what you want it to reflect, and build that out for 12 months. Yep. Have it there that you can see at any point in time. That's what my plan is for the next 12 months. And then as you go through month to month, you can start measuring how you're doing against your plan. And that's a great way for you to do a simple review model in your business. So a review model is very simple. You collect all the information, you make a set of reports, you do a preview, you have a look at it, measure, compare, analyze. You do review, compare, analyze, and then a preview looking forward. So what can I change? What can I do differently to make the next month better, or whatever it is? And then I implement a system. And then the next week I do the same thing. And that all starts on having a budget and a forecast down. So Greg Crabtree talks around the 25-75% rule. He says spend 25% of your time looking at what happened and 75% of your time looking at what you want to happen. Okay, so that's a great way to think about it. But get a profit and loss statement down, 12 months budget from all your revenues to your expenses, and pan out what you want your year to look like, making sure your profit line is where you want it to be at the end of the year.
I love that. Awesome. And we, in EA, we do it by quarter as well. Every 90 days, we have a focus of that 90 days where there is one specific number everybody on the team is well aware of, and the number has to be so concrete that it would basically be hard to misunderstand. So whether that's for 15% profit or active users or total users in general, not even just active, but hitting a revenue goal. All of these things is something that we focus on every year, and we look at how do we get to that point for the next 90 days actively, and then we each mark down what are the actionable steps to achieve the daily goal that will hit the quarterly goal and then the yearly goal.
Yeah. Is there any way to do it?
Awesome.
Got to have a plan.
25-75 rule. I think that's a pretty genius rule.
Yeah, just don't look too far backwards. Just keep your eyes on what's going to happen.
There's when you're driving in the car, that's why they make the front windshield much larger than the
much larger
than the rear view mirror. Is you're not supposed to look at that thing too often.
Yeah, that's true.
Cool. All right, man. So let's talk about a little bit about profits, sales, expenses, all together in the big picture.
So I want to just lead you to the 3 books I was talking about, because I think they really do a great way of putting these things together. So the first one is Simple Number, Big Profits, Greg Crabtree. He's got some really technical items there that are great. This 10% profit rule, that's huge. Core capital, all about him. Reasonable salary, all about him. He talks about that a ton in that book. He also talks about your labor efficiency. That gets a lot more complicated. Don't get too bogged down on that when you're initially starting a business. If you do have a big labor force, you can obviously read that and you'll understand what he's talking about there. So that's the one. The other one is obviously, this one is about a system. And I love this book about systems and putting a financial system in place that is easy to scale, that you can start seeing how your business is doing so that you can actually take it somewhere. And the last one is Profit First, which is really around the mindset change of putting profits first. So cool. The way I would tie them in all together is I would use the technical knowledge and expertise of Greg Crabtree and around those simple principles I just told you. So core capital, 10% profit, maybe 15, 25, and 20 in a service industry like we are, and a reasonable salary. Those are concepts you need to implement in your business immediately. Mm-hmm. Then you need to take this book and you need to create a system that allows you to measure those things. Profit and loss budgets, forecasts, profit and loss statements, track them, use QuickBooks, use tools that you can get online for free, CFO Coach, they're all there. Use them so you can start seeing those 3 elements in your business all the time. Every week you're seeing them. And then read Profit First. And I wouldn't do some of the advice he puts in, create different bank accounts and stuff like that, because I think that if you did everything I've just said, you're fine. Mm-hmm. But the mindset is really good about that book. And he had some amazing points around the mindset of profits first. Your business is there to make a profit. It's not there to supplement your salary. It's there to make a profit. So you can you can always earn a salary from it. And secondly, you can sell it. So that's how I would look at everything I've just spoken about in a nutshell, and then follow a process of building out that framework in your business. And I'll go over it now to wrap up. But if you follow that process, then you're going to be in an amazing place in your business, and you're going to be able to scale to heights that you probably never dreamed of.
I love that. Cool. So let's kind of start breaking down like the action plan. So step 1,
you register your business, LLC if you're starting out, perfect. Step 2, open a bank account. Own name, your own name, nothing else. If you haven't got one and you're running a business, go today, Bank of America, whatever it is, open your bank account and have it there registered in your business's name. Set up an accounting system. Okay, get a QuickBooks, Xero, whatever it is. Set up that accounting system. Watch some of those tools. If you don't want to do that and you want to use some of the other tools that are available online, do that. But watch the videos, understand how to use them, and start the process of building or using an accounting tool to track the finances in your business.
Yep.
And then 4, which is really, really big, is create a plan. Okay, what is a plan? A plan is a forecast and a budget. 12 months, lay it out there every single month, where you expect to be, where you want to be, what your expenses are, making sure that it makes sense to you. Think of those 3 principles I told you, 10%, well, let's say 15% profit, core capital. Okay, we've got to make sure we keep it in our minds. We want to build that core capital. We want to know what core capital is. Mm-hmm. What are our monthly expenses? What are we looking at? What is that target number? And secondly, why my brain doing this to me? Your salary. Okay, get your salary right from word go. So that's the plan that you got to create in your business. And then once you've done that, you can then start running the numbers. Mm-hmm. Okay, so you can then start saying, okay, what was my August P&L? Okay, how much did I bring in? What were my expenses? What are they compared to my targets that I set, my budget, my forecast, my plan? What is that in comparison? Am I on them? Am I off? Am I growing? Am I whatever's happening? As that process starts to happen, you build something that is the most invaluable thing that you have as your business owner. And that's a word called insights, because you're the only one that's going to get them. Okay, because it's your business. And you need to have insights into your business that no one else has. So people can come to me and say, hey, man, I need help with management accounting. Well, guess what? I don't know your business like you do. No one does. Okay, it's your business. And doing this process of having a plan, P&L, measuring, looking, analyzing, comparing is building insights. It's starting for you to understand how your business works. And once you've got the insights into your business, so you've got this P&L, you're gaining all these insights, you can then start managing cash flow. So my 6 would be cash flow is starting the process of starting to build that tax base, starting to build the setting any debt, building core capital reserves. So that's that cash flow element. So once you've got the plan, you're measuring it, you're analyzing it, and now you're starting to track, okay, am I building enough cash flow? Am I building reserves in my business? That's great. With the end goal of any surpluses over and above all of that, it's a profit distribution, but you got to get there. It's going to take steps, and you got to get there. And yeah, that's really that. So, and then after that, it would be considering things like labor. If you do have a labor force, starting to look at your labor efficiency, read these books, they're great. It's maybe not enough time in this topic to talk too much about that. And then taxes. Yeah. And that's really probably the 8 or 9 steps there are to your businesses. Set it up from the beginning, get it all right, have a plan in place, run your P&Ls, grow your insights, start tracking your profit and loss state, your profit, your cash flows. And then at the end of that, you can start tracking your taxes to make sure that you're on track to make your tax payments. It's not going to drain your business. The worst thing that could ever happen to any business is come tax time and there's not enough money to pay it and it cripples your business. It's just not fair. It should never happen.
Love that. Hey, man, so where can everybody find you on the internet? Get to know you more?
So this is something we do for a lot of people. We help them build these systems in their business or just help them, with any bookkeeping or accounting or management consulting functions. And CFO Coach is where it is, cfocoach.com. There's a bunch of tools there that you guys can start using right now. You download them for free. Things like budgets, forecasts, cash flow management, sales analysis, tax. It's all there. You can start using. We would love for you to start using them. Like I said to you, our ideal client is someone who started with something already. So start using them. And if you need help with that, we would love to help you if that's something you're looking for. If you're a business and you feel like you're making the money and you feel like, hey man, I'm at that 12, 15, 30, who knows, maybe $50,000 a month, however big your business is. And this is resonating with me, but I don't really have a system. We would love to get on and help you just trying to build a system, get your QuickBooks up to date, build this financial framework, get some custom reports in, and exactly what I've just spoken about, we will help you do to help you hopefully scale your business. And ultimately, we just want businesses to keep milking themselves. Don't kill the cow, whatever happens.
Keep milking yourself.
Do not
Come on.
kill the cow.
Guys, type in a giant thanks for Adam here making it out. I want to know that this was really helpful. So comment maybe one thing that maybe really stuck out to you, whether it was like paying yourself a certain salary or maybe thinking about taxes at the end as step 7 instead of step 1 is something that I was like, wow, that's actually so far down the list. You need to first.
You got to make profits first. So profits.
I love that. Awesome, guys. Well, I'll go ahead and link below this video some of the resources that he has offered. And thanks so much for watching. I'll see you next week. Thanks so much, Adam.
Thanks, Austin. Appreciate it, guys. And good luck with your businesses.
Now, here are some interesting facts about the mastermind, which give you an idea of how important it is and how necessary that you embrace this principle and make use of it in attaining success in your chosen occupation. First of all, it is the principle through which you may borrow and use the education, the experience, the influence, and perhaps the capital of other people in carrying out your own plans in life. It is the principle through which you can accomplish in 1 year more than you could accomplish without it in a lifetime if you depended entirely upon your own efforts for success.